This is Ken Jacobson. I'm a senior mortgage planner at Home Trust Mortgage, and I'm here with your mortgage market recap for the week of August 4th through today, August 8th. Let's break down what's happening in the economy, see what it means for Houston area home buyers and for real estate professionals. There was a big shakeup at the Bureau of Labor Statistics after overstating job growth by more than 250,000 over the last couple of months. The BLS commissioner was fired by President Trump. Why does this matter? What does it mean to you? The BLS influences how interest rates, inflation, and jobs report are interpreted. So leadership changes there could reshape how key data reported goes into the economy and how it looks going forward, and hopefully is more accurate. In our opinion, if they had reported jobs correctly over the last couple of months, mortgage rates would be an eighth to a quarter, maybe even a half a point lower. So who's next at the Fed? Fed Governor Kugler is out and Stephen Moran is in. Trump also hinted at who might replace Jerome Powell when his term is up in 2026. Names like Kevin Warsh and Moran are both in the mix. Leadership changes at the Fed could mean shifts in interest rate policy for the Fed funds rate and ultimately mortgage rates. What's going on with home prices? Nationally, home prices ticked up just 0.1% in June, the weakest June since 2008. But forecast models predict a 4.2% increase over the next 12 months, suggesting a lower rate environment could be on the horizon. Here in Houston, the president of HAR reports a recent dip in prices, but in June, get this, single-family home sales jumped 12.5% year over year, and inventory reached record levels, signaling it gives you a more balanced and active market. Inventory is growing, especially in Texas. Realtor.com reports listings are up 25% across the nation. Texas and Florida account for almost 1/3 of those listings. That means more options for buyers in our area and perhaps some price softening in some neighborhoods. The job market is weakening. Continuing unemployment claims are above 1.9 million for 11 straight weeks. The manufacturing and now the servicing sector is in contraction. That kind of slowdown has historically preceded a recession or told us we're already in one. Another reason for the Fed to start cutting the Fed funds rate. So the bottom line for Houston area buyers and agents, leadership changes at the BLS and Fed could reshape rate policy and data reporting. Houston home prices dipped slightly, but demand and sales are up. Texas has more inventory than most states, giving local buyers perhaps more leverage. Slowing job growth makes a rate cut more likely to the Fed funds rate, potentially improving affordability through mortgage rates. You got questions about what this means for your next move? I'm here to help. Whether you're buying, refinancing, building a house, pulling cash out, let's talk strategy. If your loan amount is $806,500 or below, ask me about a float down option to protect your rate. Call me or text me anytime, 832-524-5253. I'd love to help you move forward with clarity and confidence. Thanks for watching. Have a great day, a great weekend, and God bless you. And be safe out there.